And I feel amortization is the most fairest type of interest out there.
And that's the reason why we say not all loans are created equal.
People think they have knowledge at their fingertips because there's the internet,
Yes,
right?
we are more than happy to be proven wrong.
So that's why consultants are most important.
Okay, welcome back guys to More Than Money, the podcast where we talk about property, money and mindset. Of course, we are going to go beyond the dollars and cents. And in today's episode, we are going to explore this topic. Not all loans are created equal. This is quite near and dear to my heart. What about you?
It is the basis of my life. It's why I'm here. It's why we are doing this. It is such an important thing to understand.
Okay.
Because if you don't understand the different types of interests out there or loans out there, you just cannot take advantage of it and then you just be a slave to it. Especially in our community. If you're talking about, let's say, the Malay community.
Very unfortunate.
Very unfortunate.
There's a lot of blanket statements being thrown out there. Oh, my uncle say loans not good, bank loan not good, for example. But again, this is ignorance debt in that sense because they do not know what they do not know. Therefore, they operate their lives based on hearsay. And like you mentioned, cannot take advantage of the system, for example. So, number one, what are the different types of loans out there? Maybe we give kind of base.
So the common loans is, number one is the car loan, which is simple interest. So if you're buying a car at 100,000 and interest is 3% per annum, so if it's for 10 years, 3% times 10 is 30% interest, right? So every year is 3%.
3,000 per year.
Yeah, it's $3,000 per year. Then you divide by 12, which is $600 per month.
So you pay about 30,000 over the course of 10 years.
Correct.
Just for the borrowing lah.
Yes.
On top of the principal that you owe, which is 100,000, all in all, totality, you're paying 130k.
Correct.
Okay.
And the interest doesn't change. The amount of principal you pay into the thing also doesn't change. In fact, it doesn't matter how much you pay into the principal.
Yeah.
So that's simple interest. Another is
renovation. Renovation loan. I think this will resonate with a lot of homeowners because I think on average, they will borrow about 30,000. And then they will pay over the course of 5 years. And then the interest payable advertised is about 2.883%. But the monthly will come up to close to $600. But if you count $600 times 60 months, that's 36,000. Your principal is 30k, you borrow 30k, but you pay 6,000 of interest, of course of borrowing, over 5 years. So it's actually 20% of the principal. So effectively, you are paying close to 4% per year. You take 20% divided by 5, you get 4%. This is considered fixed also. This is called considered simple.
Simple. Simple is fixed. So no matter what, the amount is going to stay the same. Even like property is going to be it's going to stay the same, but inherently it's different. We'll explain. Yeah, but for car or reno loan, personal loan, education loans, it's all based on simple interest.
Okay. Simple interest, is it good or bad? We don't know. Depends.
Depends, honestly. Just to know that this is how simple interest works is the first part.
Quite straightforward. You owe this is how much I charge, I times over how many years, totality, this is how much you owe. Okay.
And there's also the effective interest rate. Just now we were talking about, so the calculation is 3% per annum.
Yes.
Okay. But if you calculate the effective interest rate, which is fine print, small and grey color, I think MAS requires them to put this out. It's going to be much higher. Okay?
Why?
The reason is, we'll explain because we're going to talk about amortization loan later. So the second type of loan is amortized, reducing principal. It's not reducing interest, reducing principal. So amortize, there's two meanings. Number one, amortization, meaning in Latin, is to kill off the principal. So there's another meaning, mortgage is basically to pay off until you die, slave or something. So, but we'll focus on the amortized part. So it cuts off the principal amount. So the interest will be based on the outstanding principal for the year. So while you're paying, let's say you take a property loan, let's say your monthly installment is $3,000. It's still going to look the same 3,000
for the next 30 years.
For the next 30 years, but the components in the 3,000 is very, very different.
Correct. It changes.
Yes.
Over time.
Correct. It gets lower. The interest portion gets lower and lower. And then this is where you build equity. That's where the money making is.
Correct. Yeah.
So that's amortized. And I feel amortization is the most fairest type of interest out there.
Because you only pay for the remaining loan amount.
Yes.
Right? So that's amortized interest, which is highly recommended. And that's the reason why we say not all loans are created equal. Because you have the likes of credit cards.
Oh, yes.
Balance transfer, for example. I know some folks out there, you like to pay the minimum sum, which can be dangerous.
Very.
Because 28% compounded working against you. It's an insane hill to climb.
Unless somebody or you are investing into something. So let's say, how much is credit card now? 26.88.
Let's say.
Right? So let's say you are taking a credit card loan, you want to pay the minimum balance, but you are taking the money, getting 50%. I don't know what you can get, 50%. But in essence,
Scam.
if that works, scam lah.
50%.
But in essence, if you understand how all these things work, you can really take advantage of it.
Correct.
Instead of seeing from a blanket statement, credit card not good. When I pay for my ads, I use credit card because there's 30-day credit.
That's true, yeah.
So my income,
Interest-free credit.
Interest-free credit, exactly.
Yeah.
And then sometimes when the banks call me, want to offer me a loan, sometimes I just take it. If it's at 2% plus, I'm okay.
Correct.
I like money liquid in the bank because I know I can use it, utilize it to hire, to leverage on other opportunities. And then the third type of loan is compound interest.
A lot of you are aware, CPF is compounding the stock market, for example. Shares, if you invest in an S&P index fund, you are getting compounding interest, assuming you don't take out your principal or your capital, right? 7% returns year on year. And then it's actually similar to property growth.
Correct.
Because if your property grows at 3% year on year, it is compounding to your favor. Yeah. So that's why we feel property, for most people, for most folks, is like the best kind of instrument because number one, the property grows year on year, 3% compounded. And then at the same time, the cost of borrowing is amortized. It's reducing interest.
It's the fairest interest.
It is the fairest. Yeah. So especially now interest rates are at 1.7 odd percent. That's like free money. If you put it in a simplistic manner where inflation is 3% year on year, it's free money.
So just to give you guys context, just now Jeffrey was talking about property. So let's say you buy a property at 1 million. You can't get anything at $1 million, but for easy calculation,
simple math.
So $1 million property, if it increases 3%, so at the end of 12 months, your property is going to be valued at 1.03 million.
Yes.
So that's 30,000 increase.
Growth.
And then for the second year, if it grows another 3%, it doesn't grow based on $1 million. It grows on the 1.03 million. So that's like what? 1.07 or 1.08.
Yep.
So that is compounded interest based on the asset.
Yes.
And here's the best part about property. You're just paying 5% cash, 20% CPF, and you are unlocking your CPF to acquire this $1 million value property. It's crazy.
Leverage.
It's leverage. It's high leverage.
Yep.
And it's safe. So before we go into that.
So property is leverage. It's safe because it is capital intensive.
The growth compounds.
The interest component is reducing, is amortized.
Crazy.
So if you know all this, then things can work out to your favor rather than just like you mentioned, blanket statement. Loans are bad. Just now you mentioned something about bandwidth. Maybe you explore
It's called like a debt bandwidth. I think NUS did the study on it. So basically this is very localized study. If you have debt, and you will tend to take lesser bets. You will tend to think about having these debts. Even a property debt, a property loan, you'll just take lesser bets. And it is a negative thing. It's not good. But it's amazing that a lot of people still say property is debt that is debilitating. When actually, if you reframe, if you know the psychology of it, you will want to thrive. You want to do more. You want to take more loans. You want to hyper leverage if you can.
So for those who are very bullish, there is a reason why they are, because they already understand that, say for example, they've already doubled down in terms of property. To them, it's like more leverage better. But for those uninformed, it's just eating away their bandwidth.
You're right.
And again, blanket statement, I got a lot of debt. And then it's burdening me. Therefore, I want to pay and clear as fast as possible. Otherwise, I cannot move on in life.
And then they are paying off the loans based on the wrong things. So for example, having debt, they pay off, their credit card debt. They just pay the minimum. And the debt is taking loans on maybe holidays.
I think because, I don't know, I'm just speculating that the amount wise, 20k, okay, credit card loan. But $1 million property loan. Oh my God, I want to finish paying.
Correct.
So that is too oversimplistic kind of approach.
Correct.
Because the lack of knowledge, right? The ignorance that you have, that's why you are not being more strategic
Correct.
in terms of clearing.
Another thing is, just now we were talking about compound interest. There's another problematic compound interest called CPF Accrued Interest. It's called accrued,
Yeah.
but it's actually reverse compounding. It's against you.
Yep.
And it's the worst kind of interest to happen to men.
I just thought of this. It's like someone is betting against you and it's compounding over like years.
Yeah, it's toxic. Unless, of course, the CPF, you are very aware of what is CPF accrued interest, but you do it anyway because you can buy into a property that has a higher value.
Similar to your credit card interest example. If I borrow 27%, but I make 50%, then it's a no-brainer. Because at the end of the day, it's math.
Yes.
Right? If I owe CPF 2.5, but I can grow somewhere else 3%, 4%, 5%, then it is a no-brainer for me to just use it.
Yeah.
Now, because what is the alternative? Use cash. So if I use cash, that means I say, okay, I don't want to use my CPF because 2.5%. Then I use cash. That means you are not sure or do not know how to optimize your returns for cash, right?
Yeah.
So if you know how to use your cash and get 4-5% returns, then you are more than okay to forgo that 2.5.
You're right.
Okay. So essentially it's just acquiring more knowledge.
Yes. I think nowadays, the problem again, we are very aware, is people think they have knowledge at their fingertips. Because there's the internet, right?
YouTube.
Because there's Reddit. Oh, knowledge is out there. You get so much knowledge, but you process the knowledge based on your confirmation biasness. Based on your culture, based on the friends you have. And then the knowledge comes out as a repackaged knowledge where actually it's the same kind of knowledge. The cover is different.
Essentially, you don't question the truth lah.
You're right. So that's why consultants are most important. I mean, if you are talking about when you're in business, there's value ladder. So you first offer an ebook, people read, and then after that you offer consultation, and then it's a done for you, the guy. If you are a consumer out there, you must get a consultant, a trusted consultant. I mean, even that's why we are here as well, and to explain to you all these different kinds of interests. You don't have to sign anything, you see.
Correct.
But yet, our community, I feel, we are so afraid of consultants. Penipu.
Salesy, is it?
Salesy. Very afraid.
Are we still living in that age where maybe
Defensive.
defensive?
Again, talk to people who know these consultants. Then you can tailor that knowledge to your specific situation. So that's why knowledge is a curse, I feel, in a way. Because it has that effect where you think you know.
That's true. That's why we like the phrase of strong beliefs
Loosely held. Exactly.
Like we are more than happy to be proven wrong so that we can learn.
Yes.
That's the best part.
Correct.
That's why when we attend workshops and all that, we tend to be there and what do you call that? Be on the spotlight. Because it's like free analysis on my business, for example.
You're right.
And then it's done live where all my faults are uncovered, and then I'll take home the best value in that sense. Rather than go there, then I know this, I do that, this doesn't apply to me, then why come?
So that's why even in classes, I don't know if you guys, if you are in Keller Williams, you'll notice you or me from the back, we will say yes or no, or we'll challenge the assumptions. Not because you want to act clever. Sometimes I want to be not to be challenged, but again, like you said, strong beliefs loosely held.
Yes.
If they have a better point of view, I'll adapt their point of view. Why not?
Like the recent one is just the product niche.
Product niche, exactly.
Oh my God, mind-blowing.
It's mind-blowing.
But honestly, that is another topic altogether.
And talking about interest, right? So a few strategies. This is for our private property friends, especially. So you have a property, and your property has built up enough equity, you can actually look at your current outstanding loans, let's say your credit card or car loans or high interest loans. You can gear out the cash from your current property. Nowadays, interest is like sub 2%.
Yes.
Right? If you refinance. You can gear out, let's say, $30,000. And then pay off your renovation loan, which is at 5% simple interest. Just pay it off. Or even, especially credit card. These are the crazy loans. So that is how you strategize to pay off debts. But a house debt, if a bank gives me, say, hey, you have a 30-year loan, I will ask them, can you give me a 1,000-year loan? It's simple, right? It's just, if you understand how loans work, especially in real estate, it's crazy.
So, give me more, give me a longer time to pay back. Like absolute interest that is payable is higher. But that's not the game, you see.
Correct.
The game is how do you make more from the money that you don't pay them. Right? If you have $1 million in your bank right now, why would you fully pay $1 million condo?
Yeah, you're right. Does it make sense?
If assuming you just want to buy the same $1 million condo, just use 250 lah.
You're right.
Because 750k can do something else. Right?
Betul.
Assuming there's no ABSD, you would want to buy 4 $1 million condos,
Right.
for example, or 2 million. This is just math lah.
And also, I think there's another spectrum. I mean, there are people who think debt is bad, and this group of people will try to pay off their loan as much as possible. The extreme ones will pay cash they don't want to touch their CPF because accrued interest.
Yes.
Which is fine. I'm not saying it's good, but it's okay. You understand. But now you're using that cash that can work really hard for you, earning 8%, 9% in S&P. And then you are putting into a property loan which is only 2%.
Yeah.
So that's not financial literacy. That is financial illiteracy. You're just good at saving money. You're just good at controlling your desires.
As close as you get to financial suicide.
Exactly. So of course there's the other spectrum where people take up a lot of debt. These two groups of people are actually financially illiterate. Whether you have a fully paid house, the worst is those people who pay off their property using CPF, and then the CPF accrued interest, which is reverse compound interest against you. And then if you don't die at that property, you cannot retire. Because if you die, the accrued interest will be waived. But if not, it will kill you anyway.
That's true. And you cannot hack your walls to extract
To
value.
extract the money. So that's why, having a property, let's say a private property, you can hack down your walls to extract cash.
Which is the equity term.
Again, interest is such a misunderstood thing, and we feel like you need to know all these types of interest to fully take advantage of it.
It is in your interest to know how interest works.
Yeah.
And not all loans are created equal.
Correct.
The bad ones, it's quite obvious. Credit card. It's very high interest. You have personal loans. You have... Because these are all some of the questions that if let's say my clients are comfortable, that I will ask, do you have any of these? Because in a way, yes, we are not financial planners, but we have some experience in terms of how to improve their lives. Why not clear off this? Why not when you... Like I have one client who I told them to refinance their car loan. And they are so used to paying, let's say, 1,004 on their car. And then when they refinance their car, it's 1,550. Additional $150. It's a pinch.
But
so
why?
They cannot.
Why refinance?
The reason why is because their property loan can increase from, I think, 1.2 to 1.5 to 300,000. So of course, from the onset, it's not as clear. For me, it's clear. It's no-brainer, right? But since you can loan higher for the property, number one, you are able to get a bigger, better property. That's one. Because you have more loan, you have more cash and CPF as a safety net. But they still cannot work around or accept the fact that you have to pay $150 extra. So I told them, why not? Okay, let's say you're going to take this. How long is your car? Another 5 years, for example. So for another 5 years, you need to pay $150. Why not you set up a bank account? Now that you have more cash safety net, right? Set up a bank account, gyro yourself $150 every month for the next 5 years.
Wow.
So essentially, no additional commitment.
Right.
Because sometimes it's just the psychology of having to pay more monthly.
Yeah, it's always a reframing. I think that's the skill you also need to have as a person, as a father, as a family. That you need to look at things. It's just not absolute figures.
Yes, because agents like to say numbers don't lie.
I like to say numbers don't lie.
I know. I also say numbers don't lie. But sometimes they cannot understand.
They cannot understand.
So if I say you got extra 300k loan, and then now your cash CPF buffer is more by 100,000, for example, but it doesn't solve their $150 per month.
So $150 per month. Extra is per year is 1,008. So they got a loan and property loan additional
300k.
300k. So now the property that initially what was the price of the property they can buy?
Maybe 1.4, 1.5.
1.4, let's say 1.5.
They
now
want 4 bidder.
They want 4 bidder. Now they can buy 1.8.
Yes.
1.8. So 1.5, if based on just inflation, based on 2% increase, is 30,000. But if it's based on 1.8, 36,000.
Correct. Just the growth alone will cover the additional
Crazy.
1,008 per year.
Per year.
But again, the hurdle was to come up with that additional $150. So the worst part, when they had the initial budget of 1.5, their buffer was even lesser, even lower. Because your loan is lower, and you have to use more down payment, therefore your buffer is lower, right? So it's just doesn't make sense. So would you want a $1.5 million with lower safety net? Your car is the same. Or 1.8, you get to get your house, 4-bedder, plus extra CPF and cash. And then the only cost that you have to trade off in that sense is the $150 per month extra for 5 years. So how do you solve for that? Just put 2,008. Let's say 2,000 times 5, 10k. So you put 10k, then gyro to your account. Life doesn't
Crazy,
change. Crazy.
So it's just reframing everything.
Yeah.
Wow. So that's why it's always good to have a consultant who can share with you all these things.
Because at the end of the day, it's to their benefit.
Right.
At the end of the day, the skills that we have and we acquired to utilize to help our clients, it can be used for evil.
Correct.
Because you can manipulate one.
Correct.
Yeah. So that is very crucial. You must have your client's interests at heart. They are your principal.
You're right.
Puns intended.
So I have a case study. Again, it's because we understand how interest works. So I had a client, didn't want to go out of their HDB flat, which is fine, if you have your reasons. But they actually knew the benefits of going to a private property because their friends and their family were all doing it. Unfortunately for them, because they had some kind of debt outstanding, etc., they only had access to one bank, Singapore Finance or Hong Leong, I can't recall. But the interest rate was around 4.5%. So the banks were saying, because you are high risk, we can give you the property loan, but it's 4.5%. And because of that, they didn't move for the next 2-3 months. They did not make a decision. They were just waiting.
So that was their stumbling block.
Wow, my interest is so much. They knew how to calculate interest. That's the worst part. So when I sat down with them, so I wasn't the first agent. I was like the third agent or something. So sat down with them, I say, okay, look, if you're going to pay 4.5%, how many years is it going to be with Hong Leong? 3 years. So by the time 3 years, I'm very sure your credit is okay. Their credit was not so bad actually.
I mean, if they can loan
that amount. So I just calculated their interest. Look, this is how much extra interest if you took a Hong Leong loan package at 4.5%. Because normally at that point of time was around 2%. So the difference was 2.5%. So it was like over a period of 3 years, it's only 100,000 plus. Then I was saying you can recover that in this property within 2 years. Because they were buying something at 1.5. 1.5 at 3%, it's 45k per annum. And then they immediately did it. So they knew the interest and they knew how it was going to be covered. Because no other person before me was able to show them these numbers. It's amazing.
I guess, let's say maybe the agent was like, oh, if you don't like, then it's okay lah. Like, yes, there is some kind of fiduciary duty that they will say, oh, you should go to private property, you shouldn't stay put in your HDB, for example. But sometimes they don't have the ability to frame it in a way, like how you framed it, that made the clients understand there is a bigger goal.
Correct.
Bigger why that you should do it. Yes, there are costs to it, but this is the lesser evil.
Correct. So second story, again, same thing. Usually now, I always ask clients to explore the possibility of buying 2 properties. Because being offensive is the best defensive strategy.
Okay.
You can do it, right? So 2 properties. So they were thinking whether they want to buy a second property or not. Because right now, their installments was too high. Right? Oh my God, second installment is too high. Maybe the husband is going to take the second property, cannot afford it. Then we look at the installment amount. Let's say 3,500. So I was telling them, okay, let's stretch your tenure. Just keep your installment lower just to acquire the property. Right? That's the game. You want to acquire the property, right? So maybe it became like 2008, 2007. Then you know what's the next reason they gave me? Oh, I'm going to pay extra interest. Right? Pay extra interest on the 7 or 8 years we extended. So I said, okay, fine. So let's calculate the extra interest. When you have this added interest, you also free up money. Am I not right? From 3,005 to 2008, that's $700 per month. Per year is 8,004. For 3 years is 25k. Let's put your 25k in S&P, for example. 10% is 2,500 per year. You're going to get $7,500 if you extend your loan tenure. You understand? It's all about reframing.
I think it's because I like this saying, fear is in the vague. Right? Once you go specific, then you realize it's not so bad. When you say things like, oh, I'm going to pay extra interest, it stops you because it's very vague, it's very ambiguous. And then you go like, extra interest. Stretch loan tenure to 35 is extra interest. Yes, over the course of 35, but are you going to stay there for 35 years? So like I had one client, similar, they were planning whether to extend loan tenure or not. Did the math, over 5 years, the difference, less than $2,000.
No.
Less than 2,000. He wanted to compare 35 years versus 32 years versus 28 years. You do the math, is really about 2,000, but your buffer, because of the reducing mortgage, your cash flow is better, right? And then because of your safety buffer, your denominator is lower, therefore your holding power is much longer. So isn't that better?
So that's why I think the subject of interest, knowing what kind of loans you are taking, is very very important. We're not saying simple interest is bad. We're not saying that. We're not saying amortized interest is good. Because if you take an amortized interest on a lame 3-bedroom that has no demand, then that's a bad decision.
Freehold 1 million. Your alarm bells should be ringing. Undervalued. Freehold.
Yeah. So that's all we want to talk about interest. Or unless you want to add some more.
I think the
on
last
interest.
thing, the last story that I wanted to share is last time, yes, I used to advocate for loan. Like instead of using 50k for your renovation, borrow renovation loan, because the power of loans plus you invest. And then after a while, I realized my clients don't know how to invest. So now I just put things simply. If let's say it's 30,000, you're going to pay 6,000 of cost of borrowing. Can you make back 6,000 with this 30,000 on a yearly basis for 5 years? If can, borrow. If cannot, just use your cash. Yeah. Because if you take 30,000, you take 5%, how much is that? 600 or 6,000 per year.
30,000, 5%, 30,000, 3,000, 1,500 lah.
1,500 times 5 years,
7,500.
7,500. Assuming you can make 5% year on year, you get 7,500. So you make 1,500 lah.
Yeah.
But if you don't want the bandwidth, don't borrow.
Correct. So that's another thing. That's good, right?
Yeah.
That's a good thing. Like some people, I can save $300 over 4 years. What's the point?
Yeah. Not life-changing.
Not life-changing.
Not life-changing.
Right? So you have to figure out, you have to see things holistically, and interest, loans is part of the equation. There is no human being in Singapore that has no loan. There's none.
Yeah.
Right? Even if you fully paid your HDB flat, I have no loan. Your CPF accrued interest is a loan against yourself, which is taken out from the equity of your property.
So that is it for today's episode. Not all loans are created equal. I hope this is beneficial to you guys or to our listeners out there. If you want to know or if you want to hear more of these kind of topics, do comment down below. Otherwise, maybe give some of your inputs. We are more than happy to be proven wrong.
Yes, exactly.
So till the next one. Ciao. 6,000 of cost of borrowing. Can you make back 6,000 with this 30,000 on a yearly basis for 5 years? If can, borrow. If cannot, just use your cash. Yeah. Because if you take 30,000, you take 5%. How much is that? 600 or 6,000 per year.
30,000, 5%, 30,000, 3,000, 1,500 lah.
1,500 times 5 years,
7,500.
Assuming you can make 5% year on year, you get 7,500. So you make 1,500 lah.
Yeah.
But if you don't want the bandwidth, don't borrow.
Correct. So that's another thing. That's good, right?
Yeah.
That's a good thing. Like some people, I can save $300 over 4 years. What's the point?
Yeah. Not life-changing.
Not life-changing.
Not life-changing.
Right? So you have to figure out, you have to see things holistically, and interest, loans is part of the equation. There is no human being in Singapore that has no loan. There's none.
Yeah.
Right? Even if you fully paid your HDB flat, I have no loan. Your CPF accrued interest is a loan against yourself, which is taken out from the equity of your property.
So that is it for today's episode. Not all loans are created equal. I hope this is beneficial to you guys or to our listeners out there. If you want to know or if you want to hear more of these kind of topics, do comment down below. Otherwise, maybe give some of your inputs. We are more than happy to be proven wrong.
Yes, exactly.
So till the next one. Ciao.